Hello, my name is Timothy Lee Raj Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Hopefully everybody doing well. Man, I've been grinding. Got y'all see paint all on, man. Sorry I wasn't on it yesterday, man. I'm in the middle of another project. I wasn't gonna go live today because I'm dog tired. I'm dog tired right now. I wasn't gonna go live. I said I ain't gonna miss 2 days in a row on the gang like that. I'm dog tired. Man, let me finish. I'm finished. I'm just typing this up real quick. Then I'm gonna get on. Y'all drop something in the chat so I can see who here, and I can say what's up to everybody when I get finished with this. And join the stream. All right, pin that. All right, sit this right here. All right. What's going on, man? I see Here to Learn to Share over there. I see Royce over there. I see Rhonda Green over there. I see Aswan. What's that? Hey, man, that's all I see, man. It's gonna be a slack night tonight, I guess. Let me see who in Zoom. I see Felicia over there. I see Will over there. Where's my Zoom? Hey, am I solo? Am I solo in Zoom? Oh no, I see Steve over there in Zoom. Slack night tonight, man. It don't matter. It's a slack night. I'm tired anyway. You know what I'm saying? It don't matter if it's slack night. We just gonna do what we gotta do. We gonna get up out of here. You stay away for one day, and everybody jump ship on you. Well, for those of you that are here, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, My name is Timothy Lee Rogers Sr. No, I am not Jake from State Farm. I got on my uniform. It looks like it look like Jake from State Farm. Every time I put it on, people be like, "You look like Jake from State Farm." See, I got the khakis, the red shirt. Not Jake from State Farm. Timothy Lee Rogers Sr., a.k.a. Rania Grande. That just means Big Spider if you know hablo español. And you're in tune to another episode of the Intraday Price Action Recap. Yeah, man. Yeah, man. The price action recap, that's when we just go back and look at prices, see if those things that we thought would come to fruition actually happened. Yesterday, shout out to Gang, we did a pre-market analysis and watching the price. We talked about the, thing that was most likely to play out in price action. Got some glue or something on my finger over here. Right? Talked about, the what we thought the high probability move would be in price action. And later on that day, while I was in the midst of renovations, I looked at the chart and I said, hey, I got to share this with the gang because it had did pretty much what we had discussed that morning, right? Before I started my renovations, I was able to take advantage of some of the price action, but it did leaps and bounds beyond what I participated in before I started getting busy. If you didn't see the screenshots in the Discord, I put it inside the screenshot section inside the Discord. I know a couple people reacted to it. I don't know how many people actually saw it.
Great session.
Go check it out. Did somebody say something?
I said great session, Tim, with the pre-market analysis.
Oh, talk about yesterday? Yeah.
Yes, sir.
Appreciate it. Yeah, so it panned out. It panned out, exactly like what we outlined. Without further ado, somebody at my door. Let me check my door. Man, these folk, I be like expecting packages. And the FedEx man do not ring. They don't ring the bell. They don't knock on the door. Chris. Oh, what? Did you hear something? Is it somebody outside? It's a delivery truck out there? Yeah. Okay. Look and see if something on the porch. Because I keep hearing something out there. I was expecting the package, but... yeah, grab it for me. They don't ring the bell. They did the same thing earlier. See that stuff that's sitting right over there by the TV? They did the same thing. I just heard something.
They have it outside, free lick.
Yeah, just sit it right over there by the other stuff over there.
Cage arrest?
Yeah, go ahead. Be careful when you go in, because I got some paper taped on the floor.
Oh, I forgot you paid.
So, I ain't paying it yet, but it's just, I ain't want you to go in and then slipping, because it's taped on the floor, but it is, you know what I'm saying, it ain't down. So if you go in there stepping on hard, I ain't want your feet to get from up under you. All right, man. Without further ado, I'm going to go ahead and share my screen, and we're going to get into this price action recap. Y'all do me a favor, man. Y'all know what I'm saying. Y'all do me a favor. Go ahead and hit a like for the algorithm. And subscribe to the channel if you ain't subscribed. Let me go ahead and share my screen. Let's jump up to a daily chart. We're going to jump up to a daily chart since it's Tuesday. And we didn't get a chance to talk about the price action yesterday. I took the day off because I was dog tired after a long day of... wait a minute. Before we get into this, hold on. Let's back up. I'm going to stop sharing my screen. Right? Y'all know what I'm finna do. I'm finna derail. Squirrel! Why, when you doing a project, doing renovations, doing a project, whatever, why everything slow you down? I'm talking about every time I get started, my mama called with my sister and brothers, and then I'm trying to work and talk to them, and a lot of times they be like, you too loud, or I just get sidetracked and I can't, so they go a whole hour gone, and then by the time I get off the phone with them, off the daily FaceTime call, then I may be hungry, then I eat, right? They go another 30, 45 minutes. And then by that time, it's almost time to go get my son from school, because he get out of school at 4 o'clock. And I'm like, man, do I get started on something and got to stop again? Or do I just wait? And then when I pick him up from school, by the time we get back home, it's like 4:30, 4:45. And I'm like, man, I'm losing daylight. I got to do a live stream at 6. Everything slow you down. When you would, it'd be like a 2-day project and it turns into like a 2-week project. Never fails. It did. Like I come inside, go outside, come inside, go outside. And when I get outside, I done left something inside. When I get inside, I done left something outside. And I ain't got no little laborer with me where I could be like, hey, run in there and grab that masking tape for me, or run in there and grab that drill that I set down in there. Inside, outside, inside, out. Man, when I tell you, that's why I be tired. If I was tracking my steps, my Apple Watch with its rude self would be like, boy, you doing it today. If you ever get an Apple Watch, prepare to get your nerves, get your feelings hurt. Because this thing it'd be like, check your rings. You're normally further along than this. Check your rings. Yesterday you did way more. Check your rings. If you just try a little harder, you can do it. Check your rings. This thing right here is, man, I'm sick of it. Sick of it. Be want to take it off and sling it somewhere. Check your rings. Now, let's get into it, man. We gonna go to the daily chart. Looking at the daily chart here, let me turn on my fancy dancy, right? Looking at our daily chart here, as we can see, the algorithm dropped down there and took out that sell side. Said, forget your long-term low, punk. I'm taking it out, right? And what did it do after taking it? We was like, look, we looking at this, see if it's going to stay a long-term low. We're looking at this, see if it's going to stay an intermediate term low, yada, 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 yada. IPTA said, forget your low, punk. Took them. But what did it do after it took the low? It closed right back in the middle of the road. Closed right back in the middle of the road. So what did it tell us? Not a thing. Not a thing. We are still 50-50. We are still in a place where price can go up or price can go down, right? Somebody said they killing they options premium. And you ain't never lied. And you ain't never lied. This is why price action like this is why I stopped trading options. How many years ago was it? How many years ago was it when I stopped trading options? It's 2026. Did I stop trading options in 2023? I think it was January 2023. I went full-time futures. I know it was January. I think it was when I first started the Spider Gang Discord. I think that would have been January 2023. But I stopped trading options because the higher time frames, we would be doing so much chopping. Just like matter of fact, look at the chart. Look at the chart. Look at what the chart looks like, right? This is where we are now. And if we just look back, I'm running this back, 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 running this back. We've been in this same range since September 2025. Right? We've been in the same range since September 2025. Right? Right there. Doing nothing. And then if we was on the continuous contract, we can go back and look at even more. Matter of fact, let's do that. NQ1 exclamation. Right? Now, looking at this continuous contract, y'all don't pay this no attention. That was me when I was making some charts for I think it was the magical Fibonacci tool. The magical Fibonacci tool. Y'all want a sneak peek? Y'all want a sneak peek? This right here is a graphic that I was putting together when I get ready to start teasing the magical Fibonacci tool course. And this is it right here. The magical Fibonacci tool. Trading secrets that feel illegal to know. Dun dun dun. Shout out Big Spider with the bread fours on, man. Shout out Big Spider with the bread fours. You hear me? Right? So, whenever I, get finished doing that right now, we're going to have the magical Fibonacci tool. Don't forget, the magical Fibonacci tool, if you purchase the magical Fibonacci tool, you're going to get access to the Smart Money Manuscript. Because if you don't understand the ICT concepts, right, then what I'm talking about in the magical Fibonacci tool, you know what I'm saying, you're not going to be able to really take advantage of it. So, you know what I'm saying, I'm putting that part of that content in there so that, you know what I'm saying, it ain't no excuses. And speaking of leaps, right, I'm going to be working on, I got options. I buy them, I sell them. Either I got options or we got options. I buy them, I sell them. We buy them, we sell them. Right? Because I see somebody talk about leaps. Right? But even with leaps, stuff like this kills your premium. See that? That's what we looked at initially. Right? Sideways action. Right here. Sideways action. Right? We got huge sell-off. Right? Come back up. But before that sell-off, sideways action. Right? Sideways action. Right? We got a whole bunch of spots where we just accumulating liquidity for extended periods of time. Even as we were moving up right here, bunch of back and forth and overlapping. Right? Staying inside this range, eating up premium. Eating up premium. Eating up premium. Right? And so this right here is right, so we had so if it was 2023 when I stopped trading options, right, it would have been around this time here. Right? It would have been around this time right here. And look at this price action. Look at all these overlapping candles. Look at all, oh my goodness. You probably can't tell, but let me chop this off right here. So we can do this right here. All right. 2021, 2022. Right there. We're going to get to the price action in a minute, man. All right. So, right. So here we go. Right, we got this move, and we got like these extended periods of just staying there. Go up, we pull way back, right? This right here. Got people looking down, right? Then we blast off again, and when we blast off, like, okay, we done broke out, we're gonna retrace back down and go up. Nope, stay in that area right there, eating premium up, right? Come over there, break down, right? So now prices just dumping, right? Me personally, I don't play like puts for extended periods of time, right? I play puts in shorter periods of time because, you know what I'm saying, price is predisposed to going up. So I used to like just play puts for like shorter amounts of time, maybe, you know what I'm saying, 3 months out at the most, you know, but we get this extended period of time where we going down. But even if we get this extended period of time going down, this rally back up right here, ooh, killing puts, right? That right there. And then this price action here, premium killer on the puts. Rally back up like that, killing puts, right? But you still not getting no up move. So calls is out of the question or just dying, right? And let me tell you what happened. I'll give you a little bit of game, right? This right here is the COVID run up right here, right? From here up to there. Right, that's the COVID run up. That's just September. A little bit of a, you know, this right here when everybody was flawless, right? Run up, making millionaires, right? Getting to September, we get that little pullback, right? And then going into like October, November, people buying calls. Going to October, November, then the price rally up like this right here, making people look like they rock stars, right? Over here, Quad Witch. Oh man, Quad Witch. Let's buy some leaps in Quad Witch, baby. Quad Witch, get your leaps. Rock it up. Oh, I'm a rock star. Got my Quad Witch. Options over here. This pullback right here had me scared when I got my Quad Witch. This went up, then this pullback here had me scared, and then bow. Oh, I'm a rock star. All I had to do was hold it. When I got my leaps. That's what it was back in 2020. Back in 2020 when you come around on the monthly expirations. Oh, Quad Witch, let me get me a 2-year leap. It's 2020. Let me get me a 2023 leap. I'm getting me a January 2023 leap. Quad Witch, baby. Pull back. Oh, I'm in trouble. Rally. Oh yeah, I'm a genius. Pull back. Oh, I'm in trouble. Pang out. Oh, look at that, boy. Look how I'm making that money. Look how, oh, I'm making that money. Right. Rally. All the rally. Oh, I'm a genius. Quad Witch, baby. I'm a genius. And then we made an all-time high. And ain't nobody teach us about a smart money reversal and a low risk short. Right there. Ain't nobody teach us about a smart money reversal and a low risk short. Right? So guess what happened? We operating off our rolling fours. Shout out my dog Mark. Me and Mark cool. Me and Mark actually cool. I ain't got no beef with Mark. Me and Mark actually cool. But we rocking our rolling fours. Right? So here we go. First quarter, baby. First quarter. Time for rolling fours. Here go January. Where January at? Let's find January. January 2022. That's January 2022, right? January 2022. Rolling fours. But what happened in December? What happened in December? Who know what happened in December? It happened, what we said happened in September. Anybody in the Zoom with me? Somebody put it in the chat. Somebody in the chat. What happened in December? December 2021. What we was talking about happened in September. Is this thing on? Can y'all hear me? Can y'all hear me? Huh? Y'all ain't gonna talk to me? Y'all ain't gonna talk to me?
Tim, I don't know what event you're talking about. I'm just listening to the story.
What we just said happened in September. What was the big thing? What was the big thing that happened in September?
Didn't you say COVID? You know what you said?
Nah, I ain't say COVID.
Oh. So the COVID run up.
What was I saying? What was I saying was the big thing? It happened every 3 months.
Quad winching.
Huh?
Quad winching?
Quad witch, baby! There you go. Quad witch. Guess what just happened in Quad witch? This is the time when you buy your leaps, baby. You buy your leaps, Quad witch. But look what happened. What happened in November? Smart money reversal. Nobody taught us about that. Smart money reversal. Then at the smart money reversal, right, we come into December, the third Friday in December, right? Quad witch, baby! So we buying. We buying, right? Well, let's find the third Friday in December. What's the third Friday in December? Let me see here. Friday, that's the first one. That's the third. Friday, that's the 10th. Friday, the 17th. Right here. Look when we buying leaps. Look when we buying leaps. We are buying leaps right after the market made all-time highs on the daily, got a bearish breaking market structure, right, and went into an area of consolidation, right? So we just got a smart money reversal, and now we're engineering liquidity right here. So right now this date, if we see something that's a potential smart money reversal, because we go up, then come down and get a bearish break in market structure, and we're up in a premium, and then we immediately go into consolidation, we're anticipating this to be a possible initial consolidation for a market maker buy model, right? Tim, you ain't making no sense, right? So if this, like when we come up here and get that bearish break in market structure, when we start seeing it, you say, hey, this can be a possible initial consolidation for a market maker buy model, because we just made all-time highs and now we got a bearish break in market structure. So the algorithm may reprice lower to some sell side and then come back and attack this later. That's why I say an initial consolidation for a market maker buy model. So if you anticipate this to be an initial consolidation for a market maker buy model, right, you should start looking for a low risk sale, right? You should look for a low risk sale, right? But because all we know is quad witch, baby, we're buying leaps right after. Matter of fact, we buying leaps as we break down a second time. We got the bearish break in market structure there, and then we're extending the bearish dealing range when we're buying leaps. We're extending our bearish dealing range. And then what happened? We just learned back in 2020 with the COVID run up, 2020, 2021, this right here, right? From there to here, all you had to do was just hold it. It don't matter. If it pulled back against you and you go all the way down to 10%, it pulled back against you and you down 85% on your leap, all you got to do is hold it. Because guess what? It's going to run back up. But after we got this smart money reversal, I'm going down, down, baby. Yo Street in a Range Rover for a year. You see this right here? 2022. See what there it is right there? 2023. 1 year. The market failed. And people just holding, getting hopeful, holding, getting hopeful, holding, cussing Mark out, cussing Jolene out. I'm sick of it. I hate to come up. I hate Mark Monroe. I hate Jolene. I hate all y'all. You told me to buy and you ain't never tell me to sell. Nobody taught us how to trade. Nobody taught us how to read price action. And a bunch of us went out there and started buy. Whole year straight. Market went down. People lost fortunes. People marriages got ruined. Whole lot, man. Whole lot went on. But by the grace of God, this little nappy head fella from Fort Lauderdale, Florida, in January 2023, started a community called the Spider Gang. All right? And we have been navigating these mean candles ever since then. Right? And if y'all notice, right, if you look at price overall from 2023, we've been in a pretty much a constant uptrend, but price has been more volatile, meaning there's been more ebbs and flows. There's been less straight up. There's been ebbs and flows, and you have to know how to navigate it. You have to understand how to see the price action, right? And you have to understand that price is fractal. So even if you're trading on the higher time frame, daily time frame, you got to know when to buy. Don't just buy because it's quad wicks, baby. Right? If you're buying calls, you want to buy in a discount. If you're buying puts, if you buy in puts, you want to buy them puts in a premium. Right? You want to wait for price to get to anticipatory reactionary points. Right? If we look over here in this October 2023, right? Y'all, if you was in the gang, you know we were looking for price to draw back down into, right, a monthly fair value gap. I think it was like a monthly order block. It was like a few things we was looking for price to draw down into, right? And a lot of people was like, oh, price is about to go to Hades, right? And we were talking about that wick on that order block right there. Why were we talking about that wick? Who remember when we talked about fair value gaps and how fair value gaps help little Timmy Rogers decide when to wick and when not to wick, right? On a monthly time frame, we're looking at price. We said, hey, we're anticipating the monthly chart to start to retrace. This is our bullish fair value gap that's in the discount because there's a fair value gap there. There's a fair value gap there that's in the discount of this move, right? Go back and check the tape. We talked about this back then. right? This wick of this bullish order block resides inside of that bullish fair value gap. So we want to see extreme sensitivity inside the wick of that bullish order block, right? Because if I'm not mistaken, it might have been this time right here that when it touched this right here and we got that buy now, I remember Michelle Tucker was like, damn, it just ran off without me. It's not going to retrace. I didn't get a chance to buy my calls because it just ran away from me. And I was like, Michelle, don't chase it. If you didn't buy it there, wait for it to retrace. Right? And then look here. Right back to the same spot. Right back to the same spot. What did Michael teach us? Let it create it. Trade away from it. Trade back to it. So over here, it created it, traded away from it, came back to it. As we came back to it, boop, what did we create? Another bullish order block. What did we create? Another bullish fair value gap. Price went away, came back down, touched it, Pow! Gone again. Price is fractal. So when you're trading options, right? When you're trading options, if you're like me and you don't like to play puts for a long period of time, and you primarily are looking to get into long investments, your trades are going to come few and far in between. So it's like you want to be very selective about when you deploy your capital, because you don't want to get your capital tied up in consolidation, right? It may work out for you, but you're tied up in consolidation, so you're not getting the best bang for your buck, right? Yes, waiting for a pullback, right? Will you get a lovely pullback like this? We never know. We never know. But if the algorithm offers you that, right? Like right now, speaking of pullback, Felicia said we wait on the pullback, right? If the algorithm, because every trade ain't gonna be your trade, right? But if the algorithm offers you that, okay, based off what price has done right now, we have a balanced price range here, right? We've traded down into a discount PDub rate. We've swept sell side liquidity, and we have left this efficiently delivered area, right? So now we got a balanced price range here. So now, little Timmy Rogers will go from the highest high, right, and come down to the low where we left that area, right? And we see now we just came back down just below equilibrium, right there, right? We just came below equilibrium and swept some sell side, all right? Now, right now, we're just engineering liquidity right here. We're just engineering liquidity. So we don't know which way it's going to go, right? But if it's me and I want to deploy money for a long period of time, I want to buy in a discount, right? So looking at our monthly chart right now, our discount imbalance is here. That's our discount imbalance right there, right? That's our discount imbalance. So if price at some point in time offers me an opportunity to buy right there, right? That's when I'll be looking to deploy for a long period of time based off the higher time frame right here, right? Because right now, we're up here in a premium and we're just consolidating, right? So I don't want to deploy no capital for price to go up over the long haul while we're in a premium. If I didn't get in over here somewhere, I don't want to get in for the long haul over here, right? But if price offers me a discount, right, that's when I'll deploy. And that's based off of me saying this is a balanced price range and I do not want to see price digging down into this balanced price range, right? Well, Tim, what if price got super heavy and we died off? That's our overall dealing range that we're in right now, right? This inversion fair value gap right there is a lovely place to deploy capital if price decided it want to come back down there, right? But we're not trying to force it. We're not trying to force that. Just like over here, when price came down, right? And then it started taking off like this right here. What do we do? Traded down into it, went up, right? Then we just started hanging out in this area here, slowly going up. And then finally, over here, we started to die off, right? And once we started to die off, we came back down into a discount, into that right there. Now, check this out, right? When we came here, left this balanced price range right there, we traded right back down, right, into our fair value gap. This order block is our discount PD rate. We dropped down just below equilibrium, right? And then price took off again, right? Price took off again, pow, right? But not again, but price took off, okay? So, I missed it, Tim. It's not retracing for me. Then, right, just say you didn't get in here. All right, for the next 18 months, the next 18 months, price went up, consolidate, start pulling back. It took 18 months for price to come back and offer that discount. But look here, right? If we take this right here, run it all the way up to the high, take this right here, run it all the way down to the low of our entire dealing range, right? Price came back to a discount of the entire dealing range, right? Over 18 months, but it came back down to a discount of the entire range right there at a order block, right? Well, Tim, how do I know if it's going to look at what price did, right? Balanced price range, up, down to a discount, right? Balanced price range, up, down to a discount, right? Up, relative equal lows, up, right? What is that right there? 1, 2, 3. Remember Michael be talking about that 3 drives pattern? 3 drives pattern? Failure swing? Discount! All right. The algorithm be giving you little clues as it go along. Will it give you a 3 drives pattern every time? No. But when you know what to look for, right? When you know what to look for, you can start anticipating, hey, I might can start playing puts up in here because now I can see this is a smart money reversal. That was a low risk sell, so I won't be trying to buy leaps during quad wicks, baby. It's quad wicks right here. I won't be trying to buy leaps right here. I be trying to buy leaps down here once it come back to a discount. Man, y'all do me a favor, hit like for the algorithm. And if you ain't subscribed to the channel, please subscribe. Please subscribe. Y'all know what? I should have been recording that. That was gold. That was gold. Drop one of Clue's bombs for that. I sure wish I would have been recording that. I sure would have made that a gem from the live stream. I sure enough would have made that a gems from the live stream. I promise you I would have. I promise you I would have. That was fire there. Oh well. It's at the beginning of the stream, so hopefully somebody will see it if they come back to the stream. Hopefully somebody will see it if they come back to the stream. Let's go ahead and get back to the front month, and let's look at what price is doing. We'll go to the daily. All right. We'll go to the daily time frame. EU. So, looking at our daily time frame, man, that was good. I wish I would have recorded that. That was good. All right, looking at our daily time frame. Y'all remember when we started out last week? I think it was last week. Might have been a week before last, but we just going to go to last week, right, and run this 20 days back. We were talking about this February 5th down close candle, right? Anticipating price to utilize this as a bullish order block on the lower time frames, right? And as we see, like we said, Monday, price dropped down and took out that sell side liquidity where we was looking to see if that was going to remain a long-term low. We dropped down and took it, but then we came and closed right back inside of the range. And where is that? Inside that bullish order block right there. Right? Wicks do the damage and bodies tell the story. Right? We wicked down there and we took out all kind of sell side liquidity. But look where we closed at. Right back above mean threshold of that bullish order block. So that's why we say price still hasn't told us anything, right? Besides the fact that it has manipulated sell side liquidity. All right. Also, it has extended, right, this bearish dealing range right here. Extended it a little bit lower. But we've come right back up and closed inside that order block. So now when we look at the dealing range that we're in on the daily time frame, right? Right there, right? This is the dealing range that we're in on the daily time frame. Tim, why do you say that? Because we came up, took out buy side liquidity. We came down, took out sell side liquidity, and dropped down, took out sell side liquidity again. So we're inside a bearish dealing range there. Take out a high, take out a low, that gives you a dealing range. Where are we? We are still in the middle of the road. In the middle of the road. Right, so we swept liquidity, came back up, right? Right there at that consolidation point, right in the middle of that consolidation. And then today, price poked up right above equilibrium, created relative equal highs right there at last week's high, right? Because yesterday we came down, took out last week's low and higher time frame liquidity. Then we rallied back up, and then today we came right up to last week's high and created relative equal highs, right? So we've engaged one side of the liquidity, speaking of the weekly range, right? And then we reversed and was heading toward the opposite side. Okay. And we know that the algorithm tends to do that when it creates a range, right? It will engage one side of the liquidity, and then many times it'll give you a signature to go back and attack the opposing side of the liquidity. Okay. So we down here in a discount of our range, right? Even when this February 6th low was the lowest low, right? We're still in the discount of our range, right? So the algorithm drops down, takes out sell side. Now, if the algorithm is truly bearish and wants to continue down, right, this move into the sell side with a failure to displace and we retrace right back up into the range, right? You will want to see it come and take out some form of liquidity, right? Get into a premium, maybe even take out that liquidity, but we've already swept liquidity there. So these aren't relative equal highs. This is just a swing high, right? This is internal liquidity inside this range, right? Come back up, take out some form of liquidity, and then give you a wig snatcher. That's what you will want to see on the daily time frame if price is truly bearish and wants to go down, right? But if this sell side is all that the algorithm wants, okay, it's all that the algorithm wants, then you will want to see us create a bullish Judas swing and then price be supported at that bullish breaker, right? Because you would, this right here, that would be your bullish breaker there, right? Price came down, retraced back to a premium, took out sell side, breaking market structure, support price. But right now, you just inside of a consolidation. So there's no way for anybody to say this is what the algorithm is going to do, because all we're doing is taking liquidity, moving back into the range, taking liquidity, moving back into the range. That right there is the true definition of consolidation. That right there is the true definition of engineering liquidity, right? If you notice, there has been no displacement on the daily time frame outside of this range right here, right? When we was here consolidating, we got displacement outside of this range right there, right? We got displacement outside of this range. So we have been talking about, we're in a sell program, but right now we're in the discount of the sell program. And we just sat there engineering liquidity, right? And we'll talk about how we're in a sell program, but the algorithm is showing signs of respecting bullish order flow. We came up, took out a short-term high. We came down, took out a large amount of liquidity, and got a huge bullish move off of it, right? So we're still in a sell program, but price is still respecting bullish order flow right here. Yes, it's extending the sell program, right? But where are we closing in reference to the down close candles? We created down close candle, right? This is consecutive. The last down close candle, we've been respecting mean threshold ever since we made these down close candles here, right? We came over here, made these down close candles right here. The last down close candle there, respect the mean threshold, right? Made a down close candle there, respect mean threshold. Down close candle there, respect mean threshold. Rally all the way up and take out buy side. right? Create 2 down closed candles, respect mean threshold. Down closed candle, respect mean threshold. 2 down closed candle, respect mean threshold. Right? If you're in a sell program, right, you just want to see us run over these down closed candles, meaning closing below mean threshold. You want to see the up closed candles, right, act as resistance. Not doing that. Right? Not doing that. But we're still in the middle of the road. So you don't know which way it's going to go on the higher time frame. Right? Again, if we look at, right, that's the low. Well, let's go back here for a minute because we just made that low. Okay? Remember we said if we looking at just this portion of price here, if we just look at this portion of price here from the equilibrium down to the low, right? From the equilibrium down to the low, we're consolidating in the premium of the discount, right? We're down here consolidating in the premium of the discount, right? Price sells off, takes sell side, and then quickly moves right back up, respecting that right there. Right? So you say, damn, why did it sell off? Because it sold from a premium inside this range right here. Right? It sold from a premium inside this range right here because based off our dealing range, right, we was in the premium of the discount, right? And then if we look at where we were consolidating that from the highest high to the lowest low, right? That's the highest high, lowest low of the consolidation, right? Come down, move back to equilibrium, go up, move back to equilibrium, go down, move back to equilibrium, right? Moved up, back to equilibrium, right? Took out sell side, back to equilibrium, right? Today, moved up, back to equilibrium, right there, right? And that's based off of our old consolidation area right there. Right? So price is fractal. Price is fractal, price is price. When you're looking at the daily charts and you see that you're stuck in a range, you can still see the algorithm be in the algorithm. But you just have to trade within the scope of that range, meaning you're not trying to force price to run off until it's ready, right? Until we get displacement out of this range, right? We just have to play the range. No matter if you trade in futures, no matter if you trade in options, no matter if you trade in stocks, until we displace out of this range, you have to play the range. All right. Just like we said here, we were stuck in the range, but then we got displacement out of the range. What does displacement look like? A heavy one-sided move, preferably coupled with an imbalance. All right. Well, Tim, we got 2 down closed days right there. Them 2 down closed days stayed within the range. Tim, we got 2 down closed days there and another up closed day, but we broke outside. We stayed in the range. We need a heavy one-sided move, preferably coupled with a fair value gap. Get a heavy one-sided move coupled with a fair value gap and a break in market structure that strengthens the move. The algorithm is telling you something. Oh, I know what that is. I can start looking for price to give me an opportunity to retrace and continue. Price is giving. Now, let's look at it like this right here. Let's think forward for a second. Right? We're consolidating here. Okay? Matter of fact, let's go back to this point right here. All right. We're consolidating here. We go up. We take our buy side. Right. We come back down. We take out sell side. Now, if price starts to displace away and creates a bearish fair value gap there, right? This right here can be looked as the price engine model of offset distribution. But until we displace out of this area, we don't have the offset distribution yet. Now let's go to the other side. We're consolidating here. Price trades down, takes out sell side liquidity, right? And then if it rallies and displace away, that can be offset accumulation. Consolidation, manipulate the lows and displace up. Now, what can you look at to say, hey, which one is more likely over the other? Right now, the offset accumulation is looking like, to me, that is more likely than the offset distribution. Why do I say that? Because we have come down into a deep discount, right? We've taken sell side, but look at the manner in which we took sell side. We traded down into all of this sell side and got a violent reaction back up, right? After we had been respecting bullish order flow down here while we're accumulating longs and shorts. While we're accumulating buy side and sell side, we manipulate the low and rally violently. As opposed to when we came up and we took out a short-term high, right? We didn't reject it violently immediately, right? We came up here, we took it strong, but then we just moved right back into the range and started consolidating more, right? Started consolidating more. So since we're in a discount and we're accumulating, that's why I say those are the reasons. We're in a discount, we've taken sell side liquidity, and every time we touch lows, we rally up. Touch lows, rally up, right? Touch lows. We came back to the middle of the range, but rally up, went very high in the range. Touch lows, rally up, right? Every time we touch lows, we rally up. That's another sign of respecting bullish order flow, right? But it still hasn't displaced the weight. So that's just when people say, how do you see it in real time, Tim? This is how you see it in real time. You just look at what the algorithm is doing. And you don't try to force it. You wait until the algorithm tips his hand. Because if you're trading off of this time frame, right? Remember what we said about them 18 months? Remember we saw that setup that took 18 months? When I was like, man, I should have been recording that. If you're trading off this time frame, you got to let it play out. Right? You got to let it play out. That's our daily time frame, man. That's our daily time frame where price is. Y'all do me a favor. Hit a like for the algorithm. And if you ain't subscribed to the channel, you know what to do. Lock in, man. Lock in with the gang gang. Hit subscribe, man. Hey, man. Before we move down to the Before we move down to the intraday time frame, do anybody got anything for me? Do anybody got any questions? All right. This week we started out over here. Large gap down, right? Huge gap down. This 60-minute time frame, right? Monday trading, which was Sunday night, we got a huge gap down. So we got a bearish new week opening gap. Immediately sold off, taking out last week's low and taking out that long-term low that we was saying, hey, is that going to stay in place? All right. And then that, if we squanch this up, yep, squanch is still a word. If we squanch this up, we can see that price came down, retraced back up, came down, retraced back up, consolidated, right? Took out the lows and has retraced back up now, creating relative equal highs. All right. So we've taken out all of this sell side and rallied up. So looking at what price has done this week, okay, yesterday was pretty much, you know, a full out reversal, right? V-shaped recovery there. You know what we say? We get a V-shaped recovery below a low. What's below that low? Trap traders right there. Right? Where did price not go to? It didn't go back down into there. Then we rally up, right? And this right around here is when the New York session starts, right there. So when the New York session started, quick little dip down, but we didn't go down in there. Rallied up, came back up, stayed in the upper half of the new week opening gap, right? Then continued up. Now, let's look at that. Let's look at that. Now, if y'all do not know, Michael taught, right? And I got it on the 60-minute time frame just so that I don't have to squanch it up. But this is just, price is fractal, right? So if you do not know, Michael taught when you come into a session, right? Let's just go to 15 minutes so we can get the 9:30 open on exactly, right? Because I can't get the 9:30 open on the hourly chart. All right. So let's get the 9:30 open for yesterday. All right. This is the 9:30 open right here. So price opened there at 9:30. All right. So that's our 9:30 open. Now, coming into 9:30, if you don't have a bias or if you are struggling to trust the move, here's something you can do. So, coming into 9:30 yesterday, if you didn't have a bias, like me and the gang, anybody in the gang can tell you, going into 9:30, we were bullish for the New York session because what price had done coming into the New York session. Right? You say, Tim, how can you be bullish on the day when we opened up and fell 1,000 points? All we did was retrace back up into a premium. Get it? That's a valid point. That's a valid point. We talked about that and everything. But if you look at what price has done, trap traders took out multiple levels of sell side liquidity and got a bullish break in market structure right there. Okay. So now, bullish break in market structure, balanced price range, multiple levels of liquidity taken, coming into 9:30. Not bearish, bullish. Okay. So if you're not bullish, you are bearish, but you don't know if you should be selling because of all of this momentum right here. What you can do is, you see our price at 9:30, we came up here and then got this wig snatcher. Right? We talked about this We said this run on buy side, we're looking for that to form a wig snatcher. Why? Because price was in a buy program. It was in a buy program and we engaged buy side liquidity first. So we wanted to see this become a wig snatcher, meaning we want to see it move to the opposing side of the pre-market range because we took out the pre-market high first, go back down, sweep the pre-market low, and then reverse to give us the real move in that direction. Okay? And there's the wig snatcher right there. You say, Tim, how can I participate in that? That's what I'm getting to now. Right? Once we got this run here, if you take your Fibonacci tool, right, and go over the full range, right? If price is truly bullish, right, you can put this into quadrants, right? You can put this into quadrants here, and price should respect this range right here, and this would be your premium and discount, looking for reasons to buy in the discount right there to continue on. If price is truly bullish, when we get a takeoff move like that right there, and it don't give you no chance to participate, if this move is real, put that range into quadrants and use the upper half as your dealing range. Now you got measurable risk, right, outside of way down here, that if you're wrong, so be it. But more times than not, when it runs off like that and don't give you a chance to participate, right? Like you say, Tim, it gave me the wig snatcher, but it didn't give me no chance to participate. There you go right there. Low, high, expand, retrace, deliver. Right there. Just like that. That's a freebie. I just want to throw in there from me to you. That was yesterday's price action. Right? And there's the screenshot over there that I was talking about in the gang. If we come over here to the screenshots channel, screenshots, right? For everyone that was on the pre-market analysis today, did you see that price took pre-market buy side liquidity, then pre-market sell side liquidity, then made the move to the upside after 10? We pointed out that this was the high probability move on the call. There it is right there. All our little markings that we put in there, buy side liquidity, sell side liquidity, we took it, came back up, right? Wig snatcher there, traded up, down into there. There you go. Right there. There's your move right there. A little consolidation there, but there's the move right there. And what does that align with? Right, what we were just talking about over here. Oh, I deleted the thing. God dog it, Tim. I deleted the Fibonacci. But y'all get it. Y'all know what I'm saying. Y'all know what I'm talking about. Let's give them something to talk about. Y'all do me a favor, man. Hit a like for the algorithm. Subscribe to the channel if you ain't. And y'all drop one of Clue's bombs for the analysis. I feel like I'm cooking. Let's look at today's trading, man. Let's look at today's trading. After that rally yesterday that we talked about, we opened up here. Right there. We had a small bullish gap up. Right? We had a small bullish gap up on our new day opening gap there. And then when we got that small gap up, price immediately traded back down into this afternoon Bissy, this 315 Bissy from yesterday, right? We immediately dropped down into that. Let's run some fibs on there to see how far down into that it went. We got an open on that candle at 52 even, a close on this candle right here at 52.52, so there's no volume imbalance there. We got a close on that candle at 69 even, open on this candle at 67, no volume imbalance there. So we'll just go here to there. All right. We drop down into the upper quadrant. All right. We got a small gap up, immediately drop down to the upper quadrant of the 315 Bissy. Right. Found support there. Rallied up. All right. Drop back down into the bullish order block as we was getting ready to go into midnight. All right, so we got our Asian high traded back down into the bullish order block, left the Asian low intact right there. So as we traded back down into the range, deep pull back into the order block. Then after midnight, nothing can stop me. I'm all the way up, right? Price rally, right? What does this right here look like? Didn't we just see this? Remember we talked about the algorithm did something on a daily time frame, and then it took 18 months to come back into that range? Doesn't that look eerily familiar? Came down to an area of support, a higher time frame area of support, right? Traded up, took out the high, right? This is our opening high right there from the day, right? So that gave us a breaking market structure, right? That's the highest high of the day. Came down, breaking market structure right there. Deep retracement back into the order block, right? Then we rally away. All right, once we rallied away, okay, then we come in over here and we go into a new session. This is pre-market, right? You can see right there that says pre-market high. If you can't read the letters on it, that says pre-market high. Okay, so as we go into a new session, this is a regular trade. That's regular trading hour low. And then that right there is the pre-market low. Can't really see that because our midnight is covering it up. And it's kind of hard to see that right now, but that's the pre-market low. Okay. So, and then price went all the way up, right? Set a new high in the London. That's the London high. Came all the way back down, right? And as we went into the New York pre-market, we dropped down, took out sell side liquidity, right? What is that right there? That's our London low, right? This is like the London kill zone low, and that's the London session low. But coming into the New York, we drop down, take out a previous session sell side liquidity, right? Come back down into a previous New York session, right? The afternoon session, Bissy, that we just respected the upper quadrant of right there and made the pre-market low. Okay. And then as we went into 9:30, all right, let's zoom in a little bit so we can see this. All right, as we went into 9:30, let's find our 9:30 open. 8:30, 9:30. Right? So that's our 9:30 open. I'll just put it there. That's good. Okay, so at our 9:30 open, all right, here we go again. Price rallies up, pushes up, right, into that wick, failed to get the pre-market high. Dumped down, right? Price dumped down, failed to touch the pre-market low, right? What have we been doing for like days on days on days during the opening opening range? Sending people to the reset line. Been sending people to the reset line, right? So as we coming down here, right, on this drop down right there, when we failed to take out that pre-market low, look really closely. What did we take out? We took out our opening range low, right? But Tim, what do you mean? Let me show you what I mean. All right, if I come here, I just changed it to 30-minute candles just to make it easy to see, right? So for 30-minute candles, this is our 9:30 open. That means that this is our opening range high. All right, buy side liquidity, opening range. All right, we'll make that green. All right. And then down here, that right there, that's our opening range low, right? Because if we go and look at our fancy dancy, come here, we go and look at our fancy dancy time is king graphic, right? Our fancy dancy time is king graphic, opening range is the first minutes of a thing. So the New York opening range is from 9:30 to 10 a.m., right? This is a algorithmic dispensation in time that the algorithm understands. All right. So just like pre-market is a algorithmic dispensation in time, you got a pre-market high, a pre-market low. Okay. Now, the algorithm in the first 30 minutes has been notoriously sending people to the reset line. And today was no different. We rallied up, failed to take out the high, right? Set our opening range high. We dumped down, right? Failed to take out the pre-market low. But as we did that, we took out the opening range low. Once we took out the opening range low, right, we dropped down one more time, kissed the pre-market low, didn't print past it, went down to it. What is that? Drop one of Clue's bombs for Deborah. Deborah said I'm cooking. Appreciate you, Deborah. We kissed that low. The low on that 10-15 candle is 892 and a quarter, and the low on the pre-market low is 892 even. So we came one tick away from that low, right? What went down there and kissed it. One tick away from that low. And then guess what happened? I ain't gonna say it this time because I'm killing my throat saying it. I'm killing my throat saying it. So I'm gonna come over here and I'm just gonna wait a minute. Where's my graphic? Where's my graphic? Oh my God. Where'd my graphic go? There you go. Panya! Right? So we take out the opening range sell side as we come down and kiss this low, and then we rally back up. So what happened? We established a range, right? While, you know what I'm saying? While we, coming from yesterday, we were bullish, right? We established a range, right? We're down here on a discount PD array. We're at the high of a discount PD array that we've already been respecting throughout the night, right? We've traded back down into, right, a bullish order block / inversion fair value gap, right? So we're down here, we're at support, and then we rally back up after taking out the opening range low. So when you establish the range, engage one side of the liquidity, and while you're bullish, if you engage the sell side first, that's a good thing. You want to see that bullish Judas swing, and there you go. Right, take out the sell side, rally back up, right, and then what does it not do? It don't come back down, right? Rally up. So you say, Tim, on the 15-minute time frame, it ain't giving me a chance to participate. Hey, sometimes you win, sometimes you lose. Here's a quick little dip back down, chance to come up into the high right there. That ain't give you the weekly high if you wanted that. All that did was break your heart and then pull it back into the range. But in the sense of what we always talk about, let's go down to the lower time frame and look at what happened right here in this price action. How we always talk about, let it create a range and then look for opportunity to participate. All right. Oh, Tim, this is so cherry picked. It's the same thing we talk about every day, man. All right, so we're gonna drop down to a 1 minute time frame. Before we do that, let's go to 15 minutes here, and then when we drop down here, and then got this rally right there, I'm going to put the line near. So everything to the right of this is after this manipulation of the opening range low, and then this rally back up. All right, so going down into the 1 minute time frame. Oh my goodness. I didn't expect that to happen. I did not expect that. Let me hide this hourly fair value gap so you can see what I just saw. Now, mind you now, I didn't know. I didn't know this was going to happen. But can anybody tell me, because this right here is after that rally right there. This is after that rally. Can anybody tell me what this happens to be right here? Do anybody that's in the gang, what is this Bissy right here? What is that? What? Looking at price action. Remember now, this is our 9:30 open. Right? This is our 9:30 open right there. What is this right here? Huh? What is that? Anybody know?
Is that a high probability inversion fair value gap?
Nope. Right here. Right. Look at the price now. This is the open. 9:30 open, we rally up, go into this little chop, slop. We drop down, then we displace up, right? Coming outside this area right there and create that fair value gap right there. And it has something to do with that 9:30 open. What is that right there?
First BC created after the 9:30 open.
The first presentation fair value gap. Y'all drop one of Clue's bombs for Deborah. Is that light-skinned Deborah or that RN Deborah? Let me see who that is. I knew that had to be RN Deborah because light-skinned Deborah don't be cooking like that. Light-skinned, y'all give it up for light-skinned Deborah, man. That's our first presentation fair value gap right there, people. And then, after price, remember what it did on the 15-minute time frame? It took out the opening range sell side, and then it rallied back up, right? And then when this candle closed right there, we said we were looking down into the 1 minute after this candle closed. We go to our 1 minute time frame. This candle closed right there. Look what the algorithm did. Created a BC on top of a bullish fair value gap. Right there with the first SIBI that was created on this move down right there. So what does that make that? An inversion fair value gap when that candle closed right there. So after that rejection, after we taking that low, rallying up, we got a break in market, a bullish break in market structure, right? Oh. Look at all the stuff we got here. Bullish break in market structure right there. Consecutive down close candles, right? This is the deepest run right here. So that right there, that's your order block right there. When we offer that opening price right there, what does that give us? Our change in the state delivery. Change in the state liquidity sweep of the opening range, change in the state delivery, bullish break in market structure, inversion fair value gap, bullish fair value gap, bullish order block, trade back down into the order block in the discount of this short little price leg right there, right? Candle closes, next candle opens up, bang out, trade up, drop back down into it. Nothing can stop me. I'm all the way up, right? We set an order block there, trade back down into the order block, keep running, right? So if you didn't get the buy off of this right here, right? Once we rally back up there, set that order block right there, you can buy that order block. If price touch that order block, you can buy that order block. Why? Because of all of this, what we just said, right? And then what's your target? The opposite side of that opening range. There's the opposite side. We talk about this day after day after day after day. Let the algorithm establish a range, let it engage with liquidity, and then look for signatures. Does it want to continue or reverse? If you understand the order flow you're in, you're looking for the manipulation of liquidity, right? If it gives you, if it attacks the liquidity in the direction you want to go, right? Then you want to wait for more information. Is this going to be a wig snatcher, right? How can I tell if it's going to be a wig snatcher? Where are we? Are we bullish and we're in a premium, right? It may be a wig snatcher because you want price to get back to a discount. Are we bearish and we're in a discount and we attacking sell side first? It may be a wig snatcher because you want a price to get back to a premium, right? Think about the things. Think about the order flow. What are you in a premium or discount? Which liquidity are we engaging, right? If you're in the discount and you're bullish and it engages sell side, you're just looking for the Judas swing. If you're a turtle soup trader, buy those lows. But if you're not a turtle soup trader, you're looking for the bullish Judas swing. Man, y'all ain't heard me, man. Y'all do me a favor. Hit a like for the algorithm. And subscribe to the channel if you ain't subscribed. That's all I got, man. That's all I got, man. Anybody got anything for me? Anybody got anything for me? Somebody said this needs to be a part of the gems. I was recording that one, so yeah. I'll make a gem from the live stream for that one. I think I did 2 different recordings tonight. Do y'all want me to make both gems from the live stream or just the second? I recorded the daily time frame, and then I recorded the intraday, the lower than the daily time frame. Y'all just want the lower than the daily time frame, or y'all want both of them? Now, I didn't get the one when I was up on the monthly chart and talking about like all of that. I didn't get that. I wish I did, because I was cooking. Hey, that's all I got, man. If ain't nobody got nothing, we're going to go ahead and call it there. Let me get all this junk off my screen. I am really going back to the part about when to expect the wig snatcher. That's what's up. That's what's up. Before we get out of here, I like to shout out my sister Rhonda Green. She be writing books, man. I probably should have did this again in the beginning, because ain't nobody watching after this by this deep into the thing, right? Shout out Rhonda Green. Y'all go to rhondagreen.com, right? She be writing books. Go support Rhonda Green. If you're a female that's dating, you definitely need to go check it out. If you know somebody that's a female that's dating, go check it out. I can't spell. I cannot spell. I'm struggling right now. I'm glad I ain't having on full screen, so y'all couldn't see me struggling trying to get to Run the Green website. See, that's the books up there, right? This the latest one right here. This is a digital download.
All right, today we're gonna dive in.
Fancy. Before the Butterflies. Right, that's that book right there. When I clicked on the little thing there, it took you there. Got a little snippet from How Much Is Your Dirt Worth. And then this one right here, this is the one that I got in my hand right here. Right? 40 questions before the first date. Shout out Run the Green, man. I'll go support Run the Green. That's all I got. Gang. Tomorrow is Wednesday. So it's our weekly tape reading session. Tomorrow at 9 o'clock. 9-ish. It depends on how, man, the events of Super Dad don't stop. It depends on how my son, like, morning going. Right? Because that boy there, I be telling, I say, look, man, I graduated. I ain't got to go to school. I don't care. Right? So, I'll see y'all tomorrow at 9 for the tape reading session. Hopefully we get some good price action. Hopefully we don't get that reset line price action. Speaking of reset line, I got a link for Apex in the description below. I think it's like the second or third link. If you're ready to try your hand at evals, Apex got 2 different type of evals you can get now, either end of day drawdown or intraday trailing drawdown. The intraday trailing drawdown is a little bit cheaper than the end of day, right? They're a little bit cheaper than the end of day for the actual eval and for the activation fee. I think they're doing like 80% off right now. when they first was getting ready to launch it, they sent out like emails to everybody that's got like affiliate links in the inside the video that they had. The CEO, he was talking about their plan is to leave these accounts that they got right now. This called like the core. These are the core accounts. His plans is to always have them on sale at like 80 or 90% off, and they're gonna be bringing other stuff in, right? And so, you know, if y'all want to try Apex, man, you know, use my link. I appreciate you. All right, there's many prop firms out there. A lot of people be hating on Apex, but I'm gonna tell you like this right here. Out of all the prop firms that I've tried, I tried My Funded Futures, I tried Apex. Apex, I ain't gonna say tried. All the ones that I successfully made it to the funded stage and got payouts from: My Funded Futures, Tradeify, and Apex, right? The only thing that Tradeify got over Apex is they got lightning fast payouts. They do not play when it comes to payouts, right? But they not as big as Apex, so I expect that, because back when I first started getting payouts from Apex, they were lightning fast. And now, you know what I'm saying, it be taking, sometimes it take about 4-5 days for your money to hit your account, right? But they so big now. So, but Apex, all time I ever been denied by Apex, it was a rule. They showed me the rule I violated. I said, yep, that's what I did. But, you know, I love Apex. I like Tradeify, you know. So I ain't got no affiliate link for Tradeify. So if you want to do and then Apex, you get 100% of your withdrawals, you know what I'm saying, while you in the now it used to be up to $25,000. Now you only get 6 withdrawals for your funded account, right? And then after that, they evaluate you to see if they want to take you live or if you just got to start back over again. So you can't just stay in that same account forever, right? It's like you take 6 payouts, they evaluate you. If they don't want to see you live, then you just got to start back over. If you don't want to go live, then you just got to start back over at the eval phase and then go back up. But you get to keep 100%, you know what I'm saying, in the what's the name? But Tradeify, it's a it's either 80-20 or 90-10. I can't remember. What's let me see. So the first one, the max you can do is 1,500, and then I think you end up keeping like 1,350. 1,500 minus 10%. 1,500 times 0.1, 150. Yep. So it's 90-10 split. Because when you request 1,500 from Tradeify, then 1,350 hit your account like the next day. So it's like a 90-10 split. So I like the fact that Apex lets you keep 100%. Anyway, enough sales pitch. If this was your first time tuning in to Tibbs Tidbit, you probably ain't here no more. But if so, subscribe to the channel, hit like for the algorithm, gang. I'll see y'all in the morning for the weekly tape reading session. If you'd like to be a part of the gang, I think it's like the second link in the description below. It's $50 a month for all new members. Gang members, y'all locked in. Y'all grandfathered in at whatever you paying right now, right? Shout out E-Rock. If E-Rock's still in here, I just saw E-Rock name. I just glanced over there. and I saw E-Rock name over there. It caught my attention because she got a 3-year Spider Gang badge next to her name. All right, man, that's all I got. Till the next time, I'm going to start to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just me, Big Spider, Vito Hablo Español. Y'all be safe out here in these trading streets, man. Gone.